Okay, everybody, welcome. Hope you are doing well today. I'm a little bit overexposed, actually. Let me see if I can bring that down. While we wait a second to start the stream as well, let's see if we can bring that down just a little bit there, maybe a little bit there. A little bit too much. Getting my streaming software versus the actual camera settings, which you don't see. Still getting the hang of this live streaming. Also, my daughter has been sick with bad virus that's going around, so been dealing with that in the last 2 days, 3 days. So far, 3 out of 4 days this week with a live stream, and hopefully I can continue this till the end. Appreciate, again, everybody who enjoys these, and also blending my Bitcoin economics monetary theory with some real geopolitical issues such as Ukraine, Georgia, and who knows what else coming in the next 2 weeks. So I'm going to keep at it. Thank you, everyone, for watching and donating. And small community thus far, but we're going to keep it growing. So I want to show a little bit more on Bitcoin today. I talked about how I'm evolving this idea of looking at the trend line in the past, power exponential, as a sort of evolving factor, not just as an all-time factor, because that can give us a better understanding of where the price or adoption, you can look at hash rate as well like this, or addresses, where they're above or under trend. It's better to look at the old trend line in the past. So I want to do a little bit more of that today, but in a little bit of a different manner, and I hope that this will help further drill down the idea that Bitcoin moves in power trend. It does not move in exponential trend or exponential growth. And I'll continue to, talk about what that means as we go on. So here we go, just one chart today. We got the price, log scale, going out till today, January 9th. We've had a big, somewhat big dip here from going back over 100K in December, mid-December, and then even January 6th, all right? A couple days ago, we're over 100K. Now, last price I just picked up to feed into the model, 93K right now, okay? Roughly right now. Don't know if a dip just happened, but this is what I'm feeding into the model as daily prices, including up till today. All right, so we got this model. And the theory, the idea is that Bitcoin is growing according to price. And the reason that price is the signal that we use is that, or the metric that we use is that price is the best signal. Higher prices beget higher prices, but higher prices are also a function of adoption. Okay, supply, demand, so on and so forth. So we want to try to measure this to understand it. And I got a lot of gobbledygook here in the title. Perhaps I can explain this or illustrate this better in the future. But I got a lot of information here in the title and the subtitle. I'm going to try to go through it. Okay, so what I'm going to talk about today is power. All right, see, power versus exponential. Okay, as I have been illustrating since 2018, Bitcoin's price moves in a power function. And that is important because it's different than exponential, which is most of finance. Most of finance and indeed things like population even move in exponential function, all right? And the primary driver of that is credit, interest. Interest grows in an exponential or a compounding fashion, so that's exponential. All right. So let's try to illustrate this in another way with these trend lines here today. So put on the power trend. Okay, here's the power trend. All right, I've shown this many times, 96% R squared, this number one here, power trend line. The way that I draw this is I look at all the daily data at day's end, put it all into a spreadsheet, and then as we get to today, we get two coefficients, okay, and those coefficients will help us draw the trend line. Those two coefficients are right here. This is, as I'm calling it, A and B. A is the intercept, B is the slope. Okay, now this is a very small number, the intercept. It's hard to understand it, but it's a very small figure, and if we would actually draw this price all the way back to the y-intercept, it would equal this amount. Okay, but the more interesting, important thing for power growth is this. This is B, this is the slope. Okay, I'm going to go back to this a few times. This is my website. You go to Money Supply, Financial Formulas, and I'm going to just show you some basic financial things. You know, you can find this in many websites, but these are the things that I use to try to formulate what I'm doing. This goes back to monetary based stuff. This goes back to growth things. We got doubling time, different ways to calculate it, so on and so forth. We've got the regression and trend lines. All right, 4 basic trend lines: linear, logarithmic, exponential, and power. We're focusing on exponential and power today. Okay, so the power formula is this: y equals ax to the b. A is that intercept, not as important here. B is the slope, more important factor to understand. Okay, so here I'm showing it, the actual latest values. All right, these are the latest values. This will help you draw this black line. If you have a spreadsheet and you simply run these variables down, you start with 0 as being January 3rd, 2009. Then the 4th is number 1. You continue on. So that's an x. That's multiplying by x here. You just keep these, just hard code this in, hard code that in. You will get this curve. Remember, X is not the dates, it is days. It is days. You have to understand that when you make this curve. All right, so this is a power function, and it looks pretty good. All right, incredibly, over all the years of Bitcoin, it looks really, really good. It's hard to argue with the way that the price fits this curve. And again, I've been observing this since 2018. Giovanni, a bit before that. And as I said, I took it from Low from the Bitcoin Talk Forum. He was drawing curves like this with Excel in like 2014, 2015, but he was, at the time, he saw the best fit was logarithmic, and it was at the time logarithmic. But as the price settled down, it settled into power. And so that's a different thing still. So logarithmic was what he was using here. He was using this formula. It's actually power. All right, so here we got the power curve. All right, 96% R squared. All right, that means this fit, price around this line, is 96% better than if we did price around the average. And when I say average, it just means a straight line of prices. Okay, you just take, how does the price move around its average over the same period? A 96% R squared means the price moves around the trend 96% better than the average. That's another interpretation of R squared. Okay, so there it is. All right, we see it's a great trend. We can predict out. Done many times. We get about $500, $1,000 per Bitcoin. Now, the keen observer might also know I was doing these trends for the last 2 years. This number in 2030, all right, the projected or predicted outcome based on the trend in 2030, say 2 years ago, was higher. It was over 600,000. Okay, so that just shows you this is not like, you don't need to be rigid in your model. The model takes in the data. It's a very simple, good model. You know, keep it simple, stupid. That is definitely the mantra here. If price is above the black line, it pulls the black line up. Once we get new data and price pulls the black line down, it pulls it down. And indeed, just to focus on this point, I remember specifically in 2018 drawing this curve, and because this was about the first time I launched the power model, this black line was pretty much right at the puke. The puke, you can see, started, it was November 13th, 14th, 2018. I remember this day. I was on a plane. I got out of a plane, and we went from 6 to 5. And then it might have been this day, actually, I'm not sure. But the point is that the trend line hit, it was probably this day, actually. It was November 18th. I was on the plane. Regardless, I was on a transatlantic flight, so I didn't know that the price just dumped. I mean, this is one of the biggest dumps in Bitcoin's history. percentage-wise was here. It was big. Scared a lot of people. But the power trend line at the time, I can just tell you, was about it here. If you drew it at the time, it intercepted this drop even here from the first drop. So that's kind of interesting. But as we get more and more data, we can see it goes up, down, up, down. It's actually dropped a little bit from there. That's okay. It's just, that's how these things evolve. Okay, so it's a power trend line. I've said it many times. We have other people in the space now that have gone on to this idea and further tried to break it down, show different percentiles. Look at the best Bitcoin data group on Twitter, on YouTube. I'm a part of that with these guys as well. Cena, Sminston, Plan C, Fred Krueger, these guys. They're all on board with this idea. Okay. Now there are other people that think that Bitcoin is exponential, or that the growth is exponential, which means it grows just like other markets. Stocks are exponential, by the way. Bonds, banking, debt grows exponential. A lot of different things in the world. The money supply grows exponential. So they think that Bitcoin has to be exponential, just like other things. And why would they do that? Why are they thinking that that's a good thing? Well, actually, the reason that they want that, in my opinion, is because exponential growth is indeed, over the long term, stronger than power growth. But that's a very long term, and it doesn't factor in the growth of a network. Okay, so networks typically don't grow exponentially; they grow in power. All right, they're scale invariant. When they grow the same manner, but when they're smaller, it's proportionately smaller growth, and when they're larger, it's proportionately larger growth. Okay, just a quick change here. I already have this. If you go to the chart, this is still the only chart I have up, but it's roughly that you can find this curve on my website if you want to play around with it, the power curve. All right, with the tighter band lines, as I've talked about on the last live session, here it is on log. This is why you know it's power. Log, it turns to a straight line on power, the curve. Here's that proportionate growth, okay? We look at something like doubling time, which we can also look at with exponential growth. Doubling time is the same with exponential growth. It's constant, okay? So the money supply, that is the base money supply, doubles every 6 years, roughly. A little bit faster than every 6 years. Doubles every 6 years. Doesn't matter the size of it. It will double every 6 years. That turns out to about 12.7% per year. Bitcoin does not follow that. Based on the chart we just looked at, it grows at 12.7%. It doubles. I was speaking ahead of myself here. It doubles for every 12.7 increase in days. Okay. So you can just see here, we started with the pricing data, which is, for me, Bitcoin Pizza Day 2010, 6 cents. It doubled already by July 2010. The trend doubled by July 2010, which was 64 days only. That's a 12.7 increase in time in the life of Bitcoin, in the system of Bitcoin. Do it again, still in 2010. Only 72 more days, 12.7% more. We doubled the trend again. October, we got one more time in 2010. Look at that. We doubled 4 times in 2010, but the doubling was a 12.7 increase in time. And this is actually an interesting coincidence, is the compound growth, which is totally separate. Compound exponential growth is also 12.7% of the base money supply. That's kind of interesting. I'll have to look into that more. But remember, that's 2 different numbers, 2 different trends. Not to confuse the point there, but that goes back to my base money research. In any event, 12.7% increase in time. That's what the power model represents, and it's proportionate. So as the Bitcoin network, price, users, adoption, everything is smaller, okay, it's going to grow the same. It's scale invariant, but that same is a different amount of time. Okay, so the same you can see here in the last column, 12.7%. But that sameness, that proportionality is going to depend on how many days the system is working, and that's here. the x-axis, how many days. Okay, so remember, we didn't really have pricing data in 2009. You can find it. You can find it. You can try to match it up to the power curve. I haven't done that. You can do it. But you were starting at 504 days. So we could go back in time for this, but I'm not doing it. I'm just starting with the real pricing data. 568 days. Like I said, you can double 4 times in 2010. But then as the system gets both bigger in pricing terms or adoption terms, we get bigger as far as time it's been around. It's like the Lindy effect, right? And so as long as it's larger with time it's been around, it's heavier and it's bigger, proportionately bigger. So it's going to take a longer time in days to double. So now it's going to take roughly here in 2028, I'm just picking a row, 795 days to double, which is still only a 12.7% increase in time. That's power. That's what a power curve looks like. Okay, so again, that's what we're looking at here. And you can see it's a beautiful fit. It's very interesting. Now, people like exponential because it's simple. You hear exponential growth a lot. You're like, exponential growth. Love that. That is what it comes down to in finance, whatever. People think about, the rule of 72. Okay, the rule of 72 very much hovers around a 10% compounded growth. So if you say this return is going to give us a 10% compound growth return, CAGR, as people like to say, compound annual growth rate. If you're going to get a 10% CAGR, that's going to double you. It's going to double your investment every 7.2 years. That's the rule of 72. It works best around 10% or 7.2 years. So that's the rule of 72. It's simple. It's more simple for people to understand. Bond markets, stock markets, anytime you see a yield to maturity, IRR, that's all exponential growth. So that's appealing to people to try to put that into Bitcoin terms. The problem is Bitcoin doesn't work in those terms. It works in these terms in power. And I'm going to try to further illustrate that right now. I'm going to put up, so we can go back to these 4 curves on my website. Financial formulas, regression, and trend lines. These 4 basic trend lines, there are others. You can do polynomials. You can do variations of these as well. Again, I'm not a statistician. I'm an applied statistician, you can say. I just try to think about things in a simple, basic way. Bitcoin's obviously not linear. Okay, it's not a straight line on the linear scale. We know that it's not linear. If I take, let's see, I'm not going to put it right now back on, but if I take it to linear, because my chart doesn't load so well that way, but if I take it to linear scale, you know that it's going to look very different. You barely see the price except for here in the last few days. Okay, I'll show you later. But here it's log scale. Okay, we can see we're at base 100. Each bump is 100 times higher. It's log. It certainly is working in something in the logarithmic. So the logarithmic regressions, there's 3 of them. There's logarithmic, exponential, and power. It used to be more like logarithmic, okay, which always tells you wherever x equals 1 will be that kind of intercept. It's not called an intercept, but that's where the line will hit, where x equals 1. And that's what Low, our friend, was doing back in 2014, 2015. It doesn't work that way anymore. It's power. But we still have exponential. That's the other non-linear regression that we can look at is exponential. Here's the formula for that. Y equals A to the E, all right, to the E. That's that sort of number that's kind of like pi. It's not pi, but it's a unique number in math, raised to the BX. Okay, so this is your PERT, also P to the E to the raised to the RT, that function, if you go some old calculus and stuff. E is approximately 2.718 again. This is the basic natural exponential function. You can also, like for all of these functions, linear, logarithmic, exponential, and power, you can take any data set and try to slap on these formulas and see if they work, okay? And then you just see which one fits best. That's like the basic thing you can do with statistics. So power for sure is fantastic, 96% R squared. Been talking about it for me 6 years now. That's power. Let's draw an exponential curve on the same data and let's see how it looks. Okay, for now I'm going to draw that as a green line here. Okay, starting to hopefully see the difference. This green line takes the exact same inputs as the black line. That is price. We're just manipulating the green line according to exponential growth, not according to power growth, which most sensible people in Bitcoin can see that that's how it's growing. It's not growing exponentially. It's growing in power. So look now what that will do. All right. If it was growing exponential, we had all the data and we can fit it the best we can possibly fit it mathematically, the curve will run through the data this way. But there's some problems here. Let's not even talk about the math. Let's just look visually at the problems. First of all, it does in the whole like run through the data. We can see it runs through it fine. But look at how the green line looks from here. And look at how the green line looks from here. Both earlier and later times. You know, it can certainly hit the data at certain spots, but for a long period, both at the beginning and the end, it doesn't hit anything at all. Now, people are trying to say, for whatever reason, I don't know, grifting or whatever, that the jury is still out on this, that somehow exponential is like the key to Bitcoin's growth, and it's just going to grow exponentially. And by the way, I'm sorry to say, but stock to flow is a form of exponential. It's a decaying exponential, but it's an absolute similar idea as exponential. Absolutely. But regardless, whoever's speaking about Bitcoin growth, the idea with exponential is they want to give you a number of exponential growth to say this is how it's going to grow in the future. But you have to ask, has that been the way that it's grown in the past? And is it likely to grow that way in the future? Is it likely? So again, beginning, power curve looks great fitting through the data, and power curve looks great fitting through the data. Exponential hasn't fit it, you know, for long periods of time, 3 years, 700 days more, maybe 800 days. We haven't even hit exponential. And of course, I'm not saying that it's never going to hit this green line again. We could have a huge boom this year. We could go to 1 million. All right, let's just pick end of 2025. If Bitcoin follows an exponential curve by the end of 2025, it's going to maybe tap that. Those are two independent statements, by the way. It could still tap 743,000 and not be on exponential at all, or it could somehow magically, which is basically what this comes to at this point, catch this curve and stay on it in the future and hit at 750,000 by the end of 2025. So again, I'm not putting numbers to what you're seeing here. I'm just like, let's look visually how each one looks. You can see that exponential doesn't look as good as power. It just simply doesn't visually, qualitatively, it doesn't look as good. And even if we look at the R-squareds, which again, the same principle applies. R-squared is just the goodness of fit. And that percentage, if you want to interpret it another way, let's take off the power. Exponential, if you want to look at how the data moves around the green line, the exponential line, the straight line on log linear, which shows you it's exponential. Exponential growth is this curve. And 86% is saying the price moves around the green line 86% better with less variation than it moves around the average if we just do a straight line of the average of all Bitcoin prices. Okay? So it's certainly 86% is better than 30% R squared. It's not a terrible R squared, in fact, but not nearly as good as 96% R squared. So it's better than moving around the average. That's true. We can draw an exponential curve that's decently fitting, but just again, qualitatively from the beginning to the end, it doesn't hit it at all. So we got the curves. Now we got exponential, we got power. Let me talk about this formula. These are actual constants, okay? So in exponential, all right, remember it's the PERT or the AE to the BX. This is the exponential regression formula, okay? So A is the intercept. It's going to intercept at this value, very, very small value according to this curve. And this is B, this is the slope, okay, which is a very gradual number, okay, 1.01, all right, raised to the x. But you can't really think about this as far as CAGRs or compound annual growth because you have to redo the math if you want to just be very, very simple, and I'll do that for you. In fact, I've already done it for you on the title page here. So this is the exponential function if you want to plug it into Excel or Google Sheets and you want to run it yourself. If you want to plug this in according to the all-time data, you will be able to do that with this. And again, x is our independent variable. You need x to calculate y, which is price. X is just days from the Genesis block. And then some people use Genesis block as 1. I use it as 0, like, kind of the programming way. Genesis block is time 0. It's day 0. January 4th, 2009 is day 1. And if you put all that into a spreadsheet with these variables, this is the intercept, this is the slope, you can get this straight line. So here's exponential. Here's exponential. As we said, let's just qualitatively, we look at, exponential versus power. Exponential looks not nearly as good as power as far as both predictive power and past performance viewing for your viewing pleasure. You can just see that the power fits so much better over the all-time trend, okay? Now, let's bring in this new topic that I've talked about it was my first live, and I've talked about in other things as well. Let's try to see how this thing has evolved over time. Okay, so I'm going to put out on this evolving power curve, which again, as you can see that price was moving much faster here in 2010-11, slows down. And when I put on this evolving power curve, it's going to match the future power curve because it's the same thing. I put it on now. See that? See, we see it in the beginning. This was how it looked. And what you're seeing here is basically the tangent of any power curve. So this black solid line is the all-time curve. I could draw 5,800 prior black lines based on every day as the new data adopted, but I'm just showing you the tangent at any day, which is the dotted line. And it's important actually to show this because it can show you how good or bad a prior trend was. So you can see, and this also, remember, in my multiple analysis, things I'm not showing on this video, it's just a better universe of data. Actually look at the evolving trend. It can tell you more information. So we can see that indeed we're going pretty fast, a faster clip in 2011, 12, 13, 14. But this is what I've been saying for years now. From about 2016, really about year-end 2016 even, you see we immediately settle into what has become the all-time trend. It's incredible. From the end of 2016, you're looking at December right now, my tooltip, December 6th, December 8th, 2016, we're almost, the evolving trend is the same as that number one trend, which includes 8 more years of data. Yeah, 8, 7, 8, 9, 10, 11, 12, 22, 23, 24. Yeah, 8 full more years of data. Sometimes I got to catch myself with even simple math. There's 8 full more years of data in the black solid line, and the black dotted line is evolving as is. You're seeing it evolve with the data that it has. So look at that. Look at the predictive power of the power curve since 2016. It has shown you there's something seriously strong about this. And even at 2012, it hit it, although the boom in 2013 really pulled it back up again, while the crypto winter put it way down. It's pretty wild. It's pretty interesting. So from here to here, it's like almost identical. Pulls it up during the booms. And you see that it pulls it up as it's still going down. Right? It's just how it works. And then once it really goes down, it's going to pull that evolving trend back down. Same thing for the next boom in 2021. So this is why I love drawing trend lines and trying to dissect these trend lines in different ways so that you can really see what's happening here. Okay, so this is the evolving power curve. Now, let's take them both off. Let's look at the exponential and do this analysis. Let's do this. Let's figure this out with exponential. All right, we know that it doesn't look as good. Clearly doesn't look as good from the beginning to the end, or in the end, I should say. In the middle, yes, it does intersect the data. Almost looks maybe like a a good form of resistance, fine, during the crypto winter and during this 2019-21 period. But then look, from 2019, 2020 here, from 2021, it's dropped under, it hasn't come back. So if someone thinks that we're in some, like, just ignore that, but we're really in a mega exponential Bitcoin scenario, well, understand what's going to have to happen is Bitcoin's going to have to jump to 1 million by the end of the year and stay there, and then be on that trend. It's a great trend. Don't get me wrong. I'm not going to be disappointed if I'm wrong here. It's a fantastic trend for Bitcoin hodlers. We're just talking about probabilities here. What is more likely? So here's the trend. Let's draw the evolving exponential now and see how that looks. So again, what I'm showing you here is I could show you 5,000 different exponential trend lines and the tangent, how they evolved and changed over the last 15 years, or I could just show you the tangent of every one, which is the dotted line, and show you where it is. Okay, so what you're looking at here is way steeper solid lines if I drew them, and then they would start to come down over the years. That's what you see with that dotted line. But look at what's happening here. Look at the predictive power of the exponential trend. Remember I told you that the evolvings, if I take the evolving off, as it moves into the future, it's going to be the all-time because we don't know any more data. So these are the same thing. Look, I'm going to take off the exponential. You see that it's the same thing as the exponential into the future because I don't know. Nobody knows what's going to happen in the future. So the future predictive power of any trend is going to always be the same. However you want to slice it, it's always going to be whatever we last calculated, whatever the last piece of data that we have. So they're the same. But as we evolve to it, look at the discrepancy. It hasn't touched it once. All right. This is where you can see some interesting things. Like all through the crypto winter here, our exponential trend was way higher. This means that if we drew a trend line here, we drew a solid trend line, a solid green line here, you would see something that would move steeper and through that play button, not as it looks here. This doesn't exist back in 2015. But you're going to see it. Just imagine what the exponential trend line looks like. It's just going to be a steep straight line that somehow hits that play button. So as we evolve the exponential trend, the idea of an exponential trend out in Bitcoin's life, if we want to look at trend lines as being indicative of the nature of the system, of the nature of adoption, of the nature of price, supply, demand dynamics, then these two things should be close together. And they're not at all. Look in price terms. I mean, we're $1,800 off here in 2015 as we grow, right? Remember, this is exponential growth. I almost caught myself. This grows in non-linear fashion. This is a non-linear scale. So now we're $9,000 off, even though the line looks closer than it did here, where it was, whatever, $1,500. Doesn't matter what you pick, $1,300. Here now it's $9,000, $15,000 off, and it's going to be worse even here. We're $60,000 off the actual trend that we drew today versus in the past as we evolved it. And then finally, once we get all the data and we pull down that exponential evolving trend line until all the data that we have, we match. Hopefully this is starting to put some light bulbs off. If you still have questions about how the power works versus the exponential, let's just go back again and do the same analysis. Let's put power and then the evolving power. Look at how close that is. Look at how tight that is. Remember, the evolving data, it's just what data exists at the time. So again, by 2016, it's just damn near the same. The predictive power is incredible. It's because it's power growth. Bitcoin grows like power systems do. Now, What else grows in power? This isn't going to be a long lecture here, but the internet was like that. Cities are another example. Cities. Also, the way smaller organisms metabolize food compared to bigger organisms. I could pick all these pictures and stuff. It wouldn't. I probably should have done that. I'm not going to try to be a statistician slash physicist and lecture on those things, but there are things in nature that grow according to power. There are things in nature that grow according to exponential. A lot of people want Bitcoin to grow to exponential because it's an easy thing. They might not even know why they're saying it, by the way, that Bitcoin grows exponential. Most people just kind of vomit the word exponential because they've heard it so much. It's exponential growth, exponential growth. It's exponential growth. It's great. You got to understand what that actually means in context to understand if it's exponential growth. So now, putting back the two trends, the lifetime, all right, let's define them as far as exponential growth. And here I've done it again, a lot of data in the titles. I did it here with power, and I did it here with exponential. So what's CAGR? Compound annual growth rate. That's that simple term that any financial analyst is going to look towards, any stock trader is going to look towards if he hears it. A dividend yield is also the same thing. Bond yields are the same thing. Yield to maturity, IRR. These are CAGRs. We assume that this is something that you're going to be able to replicate as a business or as a government when you pay out your coupon payments. CAGR, compound annual growth rate. That is an exponential term, no doubt. Einstein, Jefferson, I think it was actually not Einstein, but I think it was Jefferson that said, they all sort of basically said compound interest is one of the eighth wonder of the world, whatever. You can check my quotes on that. It's a wild thing that it works out for certain systems. It does, for sure. But now let's try to, again, talk about that. The simple example, rule of 72, a 10% return will double not every 10 years. You would think it's 10. But since it's the rule of compounding, it's exponential growth, it doubles every 7.2 years. And that is constant. It's not 7.2 years the first 10 years and then faster the second 10. No, if the system is working on a exponential curve, it's doubling every 7.2 years. 7.2, and then you get up to 14.4, we've doubled again. That's what it means. That's exponential growth. So let's actually start with exponential. You can see that that makes sense here. But what does it mean? Let's now take this confusing formula, which again, if you want to draw it out on Google Sheets or Excel, you can do it right here. Let's take the confusing formula here. Let's put it into layman's terms. That's here. This curve is 122% CAGR. Okay, it's trying to take in all the fast growth in the early days, the slower growth in the later days, the mid growth in the middle days, and put it into a curve that's exponential. 122% per year, constantly compounding, constant. Exponential is constant growth. So you can pick any time here, and you're gonna, if you find the doubling time, which I should have had that example, I don't have it offhand, but it's just going to be faster than 7.2 years, right? 122%. It's going to be, let's say 5 years. I don't know the exact answer. Let me actually find it for you. It would be easier. So let me make sure I'm not sharing that screen. I shouldn't be. It is, sorry for the dead time. I should have had this one. I'm going to have to cut this out for my long videos, but using an exponential formula. Why is this so hard for me to find? I have it, guys. Sorry. It's it's actually 0.9 years. 0.9 years. Sorry for the dead time. It's 0.9 years. So 100% CAGR, rule of 72 is not, I think I said 7.2 years. That's 10%. 10%. All right, we're all in the world of exponentials here. 100% is much faster, obviously, than 7.2. 100% would be something like, well, I don't know what it is actually with 100% because it's not actually going to be 7.2%. 122% is going to be a doubling every 0.9 years. 0.9 years. 0.9 years. Actually, yeah, 100% is every year. So in the world of compounding, that makes sense. Little brain hiccup there. In the world of compounding, 100% CAGR will double every year. That's your meeting point. 10% CAGR is doubling every 7.2 years. So that's kind of a simple way to determine what exponential growth means. Okay, when you're at 10% growth, 7.2 years, not 10 years. But if you have 100% compounding growth, that doubles every year. And if you have 122%, which is what Bitcoin is showing, if we try to horseshoe it into exponential, it's 122% or a doubling every 0.9 years. So it's a great growth rate. I mean, everybody's going to love it. Everybody loves that. You know, if you can find an analyst that actually is going to rigorously calculate this for you. If you're working at exponential growth, that's what it means. It means 122% CAGR or a doubling every 0.9 years. So if we go less than a year out the curve, every time on the curve, it doesn't matter where you are here, you'll double. The trend line itself will double. So that's what it means. That's what it's saying. Now, compare it back to power. Compare it back to the more natural evolution of what Bitcoin is doing. Is this curve. What does it mean? You can still define power in exponential. You just have to be rigorous in what you're saying. And this is what I'm saying, or this is how I would tell you. The power curve, we can define it in totality, what it would be in a compound annual growth, and it's actually higher. Why is it higher? Because I'm taking the beginning of the curve here. You can see when the trend is under a penny. I'm not rounding it, but the power trend is obviously 0. The exponential trend's only 3. By the way, you see where that 2 is way up above the data. It doesn't fit it. But the power trend is, you know, in something in sense. If we took whatever that value was right there, May 22nd, and ended it here at $89,000 per Bitcoin, we get 163% CAGR. But, big caveat, but. So first of all, we can see it's better than the exponential. So that's nice. That's a nice thing. But that doesn't really mean anything because it's not growing at that rate right now. Right now, the CAGR is about 45%. And I have that on my website as well. Let's go back. It's on the charts subpage of the chart. Remember, this is not the CAGR. This is the increase in time, which is about 12.7% increase in time will double. I have it here. So what I showed you with that one number here, this is the trend growth rate. What I showed you here, 163%, is sort of a blended all-time number. It doesn't make sense for power. I'm just showing it to show it. It does make sense to repeat. If you have an exponential trend, then you can say 122% because it's constant, right? You have that solid green line that just grows and grows and grows at 122% per year, or doubles every 0.9 years. But with power, it declines. So this blended 163%, actually what it is in the last year, 2024, was 45%. And this year, it'll be 42%. Next year, 39%. Year after, 36, 34. Still pretty good returns, look, by the way. So if you want to dream about altcoins, scam coins, whatever, be my guest. But if you want to look at the stoic way to look at Bitcoin, look at this curve. These are huge returns, ginormous returns, according to any compound growth target. All the way out in 25, you're still at a 24% year growth rate of the trend, even though the trend is declining. It's that, slowly declining trend. And how much does that decline at? About 7% per year at the moment. Okay, and look at this. The rate of decline also declines. So this is sort of the interesting thing about power. It's hard to put to put all of it into one easy box to figure out. The trend will slow down as the trend gets bigger. This is part of that proportionality that happens here. It's proportionate. It's proportionate. Networks are proportionate. They're the same amount of, you know, I shouldn't start to talk like I'm an expert in Moore's law here, but when you have smaller amount of users, smaller amount of connections, smaller amount of transistors, if you're talking physical world, you need a smaller amount of computational power, whatever, data, communications. And as we get bigger, you need, of course, bigger, but it's a proportionate amount. That's how cities can have millions of more people, but not millions of more parking spaces. Don't quote me on that, but you get the idea. It's proportionate. The increases are proportionate as the network grows. That's what Bitcoin is doing. It's an elegant way to look at Bitcoin. So let me go back to here. What did I want to show you on this table again? This is the last table of how it evolves. The power trend. So this growth rate slows. And also I put it into doubling time. So again, it is so fast and it is close to exponential growth. It seems like exponential growth. But here, that 2011, remember and even in 2010, we doubled 4 times in 2010, right? 2011, we doubled 3 times on the power curve. So there's a huge, you can put that into a compounding term. It is here. This is the annual growth rate. But that growth rate declines and the doubling time increases. It's not how exponential growth works. If this was a table of exponential growth, just to imagine, these 2 lines are the same. The growth rate's the same every year. The doubling time's the same every year. These 2 columns are the same. So that is the difference. I hope I'm getting there. That is the difference between exponential and power. And I think for a lot of finance people, even tech people, they don't actually have a lot of experience with power. It seems weird. It also seems not that great, right? You don't think that it's cool because it slows down. You don't think that it's nice. You want that exponential growth. You want to get in early, like a penny stock. Sorry, you want to be on this. You want to be on this exponential growth trend, which is a straight line on log scale, and just rocket out to unicorn returns, because that is indeed how individual companies, stocks, simply, in my opinion, my understanding, it comes back to the rate of interest, the rate of credit. It's an exponential function. It's just compound growth, compound interest. It's the same. It's all part of the same exponential growth package. People want to be in on that when they talk about those growth rates. So that's why those stock to flow fans, people that are talking about Bitcoin is on an exponential curve, that's why they want this straight line, because look at the trend line out until 2030. $42 million Bitcoin. I haven't said the elephant in the room yet, have I? $42 million Bitcoin is projected using, shoehorning in exponential growth to Bitcoin. And people that are doing stock to flow or other things, they say, well, actually it's a declining exponential growth. It's not as fast. It doesn't matter. It's not as elegant. It's not as stock to flow. If it was so elegant, it would work on gold. It would work on silver. Plan B wouldn't have to redo his model. All these things. This model certainly will adjust. It will adapt, but it adapts most appropriately with the power curve. Okay, so here we see the difference. Now, this is another brass tacks things I wanted to show in this video. We go out here to 2030. Our power trend shows a meager $550,000 per Bitcoin. Could be higher, could be lower. That's obviously the most honest statement, stupid statement I could make. Of course, it could be higher, it could be lower. But presuming we get another boom here, which we get these booms every 4 years, this could be pulled back up. All right, remember, it's going to be pulled back up. I'm talking about the black line, the power line, as well as the green line will be pulled up during another boom. But just look at the 2 numbers, 41 million versus 550,000. Common sense comes into play here as well. Hodling mentality comes into play here. A lot of things come into play here. And look, for any system, you could draw a linear trend line. I could draw a linear trend line on here for you, and it would look dumb, obviously. It wouldn't look good. We can draw logarithmic trend lines, which is a little bit harder, but it revolves around where we are in the first period. It's not worth going into. We can draw power, we can draw exponential. We can shoehorn in any trend line. So I can always draw the exponential trend line for you as we get more days. But ask yourself, since 2021, and we've fallen way off it, do you think that that's because we're really on a mega trend, a mega exponential trend, or is it that Bitcoin grows like other networks grow, like cities grow? It's metabolizing proportionately to as the network grows, as supply demand grow and increase in a proportionate manner, not in this constant manner that exponential growth and compound interest goes. I'm going to try to get more examples. I should come with more examples than just my words off the top of my head as I do these streams. But follow Giovanni for that. A lot of the best Bitcoin data crew, they will give you good info as well in many different ways to slice and dice this data. I got my theories, my thoughts. To finish this up, let me show you. I think just the evolving power and the evolving exponential. So here, evolving power. Look, remember, this is just the data as it comes, and then it's going to be the same thing, as I've said, as the future exponential, because we have no more data. It's going to be the same thing. So this becomes the all-time trend line once we get to today. It matches. And again, to be 100% clear and certain with all this stuff, look at how good it is from 2016. It's just great. It's really amazing. And I don't say that like with any sort of weird scientific thought. I just say it in sort of just general. I mean, you can just see how amazing this thing is getting to predicting what the all-time trend looks like. It's just generally a beautiful looking trend. Now we put on the evolving exponential, and compare what's happening from when we look at the past to going into the future. And I think you're going to see a big difference here. This, to me, really shows the picture. We can do the same analysis where we see that the dotted green line is always way above the solid green line, but let's even take away the solid. Remember, the future is always the same. Look at this kink when we get to today, finally. When that exponential, we get all the data, we get all the pricing data, and we find ourselves to today, and we draw an exponential curve to today. Look at that kink up. This is the only way the exponential will hold. It just, you gotta draw it this way. Like the curve is going to change drastically every day until you get it to here. Whereas with power, it's a nice, smooth evolution. If it truly was an exponential system, you would not see this kink. You would see the kink more on the power, not on the exponential. But because it's a power system, you don't see the kink. On the power, you see that weird looking kink and this weird looking evolution into the future because it's not exponential. Bitcoin is not exponential. So I think this gives, perhaps in the best way I've been able to think about it and to show it, the best illustration of why the Bitcoin system follows a power trend and why the Bitcoin system does not follow an exponential trend. As much as people want to see compound, constant growth in the future, you're not getting that from the data at all. Stock to flow is not giving you that. Declining exponential is not giving you that. Only the power curve is giving you this beautiful, very consistent since 2016 performance, where past performance does kind of indicate future results. And again, I say that by giving the same caveat. I'm from the Midwest, never financial advice, so on and so forth. But the regression, if you follow the data, you can see that this system, like the internet, like other networks, social networks, like cities, it grows. It's a scale invariant relationship. When it's smaller, it's going to grow at the same rate proportionally as when it's bigger. Whereas exponential is just constant. Day in, day out, constant growth. And you can't shoehorn exponential into the data of Bitcoin. Still no questions. I'm happy to answer any if you have them, but we're already close to an hour, and my daughter hasn't had any vomit issues. Too much information there. Sorry. Hopefully she gets better very, very soon. But I'm glad I could get this video out for you guys. If no more questions, I will probably end it there. Thank you for watching. 3 out of 4 days stream this week in the new year. Maybe I can make it 4 out of 5 tomorrow for Friday. So, gonna leave it there, guys. Thank you for watching. Tere. Hello, goodbye, and